Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains, yeah. The ants in France stay mainly in your ponds. Hey, good morning, how are you doing? Fabulous Tuesday, December 8th, 2015. So your daily Forex trading strategy session. You guys ready for some currency trading? Yeah, me too. Let's get fired up. So welcome to Forex.Today, another daily Forex trading strategy session. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Whoop, whoop. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that gives traders access to Forex, but a whole bunch more. You got energies on your mind? Oil. Oil. It's supposed to be Georgia, whatever. Hey, this is London Lunch. A couple hours before New York opens. It's a good time to get together as a community of traders to talk about what has been and what may be, align the satellites, and collaborate. I'm here at Forex.Today every single day, Monday through Thursday, and every Friday at FXStreet.com. Last Friday at FX Street, I think there were 750 people registered. Booyah! Come to Forex.Today. We have at least a dozen trading ideas for you that are fresh and new. So fresh and so clean, written by our analyst team. Also archives of previous webinars like the one you're in today. And of course, if you register and log in, you will have access to our live community chat. Talk to other traders like yourself. Overnight review, Japan avoids technical recession. Yay! Good job, Japan. Yeah, only one negative quarter in a row. Good job. But here's the interesting thing. Is it working? 2 quarters in a row of negative numbers. Okay, Hussein? So they only had one. And they tiptoed out of this one. Just barely, right? So what it does is gives you political support, per se. Hey, it must be working, right? We're expanding at a 0.2% expansion rate. Yay! So whatever, they avoided it. I forget what the number was, but of course it's pathetic, right? But at least it's not 2 negative numbers in a row. Hey, yeah, that's good news, right? But what it does suggest, maybe, just maybe, they increase their stimulus. Because what else are they going to do? Okay? But at least it's not failing, so therefore it gives you political power to do more QE. And that would weaken the Japanese yen, and that would be good for carry trades. China missed its numbers. Wah, wah, wah. 4-month low. Exports down 7%. Now, it seems to me China is supposed to be exporting. What was China's response to the financial crisis? What did they do? Big currency devaluation. Yeah, but that was only like 3 weeks ago. What did they do 4 or 5 years ago? Okay. They tried to stimulate their economy by building and building and building. Remember, even though we were in a financial crisis, iron ore and steel went through the roof and coal was expensive and all these different things, right? Well, their economy is still built on exporting, which means you need factories and infrastructure for factories, right? And to give you a sense, since the financial crisis, let's say over the last 5 years, really not last year, but 5 years ago up until last year, right? The 5 previous years to last year, they poured more concrete than the United States poured in the previous 100 years, from 1900 to 2000. What? Yeah, they built a New York City and a Chicago and a Los Angeles and a San Francisco and and Atlanta, and poured more concrete in those 5 years than in the since the last century in the United States. Holy smokes! Wow! And guess what it's used for? Nothing, because they're waiting, right? They built capacity, yet nobody wants anything. It's not just, you say units, but it's really factories and infrastructure for factories. It's not necessarily just apartment buildings. Okay? So now they're sitting around waiting for the orders. And they have to wait for the Europeans, and that's going to be a long wait. But the good news is they're broke. And they're importing less as well. Yay. Partially, though, that's because, a lot of products are starting to be, foreign products are starting to be made in China, right? Like Nike's sales are up 30% year over year, and some other brand was 100% year over year. I forget what it was, but anyways, importing less, importing a lot less, exporting a lot less, just not good across the board, right? Okay. And UK industrial production mixed, fine, cool, whatever. So what's up? Canadian housing starts today. Well, do you think we really care about that? No. Are you playing the bloodbath in the Canadian dollar? Yeah. So oh, well, forget it. Maybe I should buy Canadian dollar because of building permits, right? Nah, come on. Oil prices are, where are they now? 37.97 last time I looked. Yeah, below $38. So yeah, you got to just, it's been falling since it broke that range just steadily. So cool, man. Very cool. And of course, the fall in Canadian dollar came from the OPEC meeting on Friday, and that's that. So is this stuff important? No, not relative to that. October jolts. Another Investor Business Daily's economic optimism index. Don't care. UK GDP estimate, we'll see. We'll see. I wouldn't expect anything out of that either. How about Governor Pelosi out of Canada? So we talked about this on Monday. So what is today? Tuesday? We talked about this yesterday, and he's got a speech. What's he going to say? Good things? Yeah. Well, you can't oversleep. Are you guys talking about the Canadian move? That was Friday. You can't oversleep that much. All right. Right. Is he going to spin something? Well, what could he spin? Falling oil prices and falling iron prices and falling copper prices and falling nickel prices and falling wheat prices. It's all good in the hood. But besides all that, we're set. So, what's he going to do? Reverse the tide? Probably not. And then in the Asian session, Chinese inflation, CPI. Okay? Producer price index, look at that, guys, down 6% year over year. And that's the things, that's raw material like iron ore and coal and oil. Okay, so, yeah. All right, so I wouldn't get too crazy about the New York session. I don't think there's too much in the way. I think you can find your trade and make it happen, not worry too much. Okay, Serap is asking, couldn't catch what the Canadian dollar is, a sell or a buy. All right, so let's go back. Let's, good segue. Let's go to the live charts, yo. Ciao. Okay, so here we are in the world, and we need to go to Kitty Cat, but travel through time, if you will, to Friday. Oil is stuck at 40 bucks a barrel. We have a clear floor. It's a big psych level. And OPEC is having a meeting. And the whole world is worried and wondering how far could oil possibly fall in price? Or is 40 the floor, and is this thing going to go up someday? So what makes prices change is supply and demand, right? Right? This is your demand equation. And supply. And this is, right, price. So when supply is high, price is going to be low. Demand is low. Okay, so right now we have this low demand and low supply. And I think I messed that up, so don't pay too much attention to that. I wasn't planning on doing this. Actually, I think the screen's frozen. Good time for it to freeze. Right when I messed up a chart. Let's see. There we go. It's all right. Don't look at that chart. I think I messed that up. All right, so here's what I wanted to say. OPEC met on Friday, and the world was wondering, was $40 a barrel floor? And if it is, then the worst for the Canadian dollar is possibly over. And other oil producers like Norway, for example, okay, or Russia even, right? All right, so OPEC gets together. They're obviously a large producer of oil as a cartel, and they decided not to cut. Now, if they cut production, that means less supply. We can't affect demand. Demand is low. But if they cut back on supply, then the supply-demand equation that I was trying to show you very quickly, and then I realized I drew it wrong, but the supply-demand equation would demand that oil prices would go up. If you cut back supply, prices should eventually go back up. Okay? So they have this meeting. We're stuck at 40. It seems like the end of the world for a lot of oil producers, and they actually need Saudi Arabia, basically, right, OPEC, to cut. And you'd even think that maybe the OPEC countries need prices to go up so that they would cut production on the short term. And actually we get the exact opposite. They drew a line in the sand, and they said, we're going to continue producing oil at the current rates. And we're going to drive prices down, is basically what they said. All right, so anyways, oil prices tank. We go through 40 to 39 to 38 to 37 and change. Holy smokes. Okay? So Canada is a huge producer of oil. It exports that oil globally. It competes with OPEC. And Canada's hurt by falling commodity prices. Not just oil, a lot of commodities are down, but in that specific, the catalyst for the current Canadian dollar weakness is the OPEC meeting on Friday. So since then, you should have been shorting Canadian dollar. Pretty straightforward. And so you can see if USD CAD is going up, the Canadian dollar is falling relative to the value of the U.S. Okay, and you see our old trade plan here, up, break, pull back, and gone. And it's a pretty quick move. If I go to a 15-minute chart, it's pretty loufle, right? Just off we go, HOTTOGO. Pretty nice, huh? Okay, there's the range, the breakout, gone. Little volatility associated with things like ECB meeting, really, and then, okay, that's right. Sell CAD. Oh, Chavez says, so why is it good for OPEC? It's not good for OPEC, but it's worse for the competitors. So it's this idea of maybe you can put a lot of the businesses out of business and then jack up prices again. Okay? So if Saudi Arabia, like for example, I have family in the oil business in Canada, and I found out this one city that that had been producing oil forever. There's a big facility on the outskirts of town, and this looks like the Borg spaceship. Do you guys know Star Trek: The New Generation? If I say it looks like a Borg ship, do you know what that means? Yeah, but of pipes, right? Cube of pipes. That's what this thing looked like. Honestly, as a child, when you came across these things, and they were all over Alberta, giant facilities of pipes, and there's like flames that are, 15 stories high, and they're burning off these gases, and it's running day and night, and just wow, it's an incredible thing. It honestly looks like another planet, right? Something from another planet. And I found out years later that it was producing oil at a cost of $7 a barrel. What? What? Say what? Because everything had been paid for decades earlier. It's all been paid for. There's no loans on it anymore. Everybody's been paid off. It's just sitting there, and there's basically a cost of maintenance. And then you got to pay some guy, probably just for the insurance. You got to pay some guy to sit in a chair with a bunch of, lights in front of him, and probably a big kill switch that says, if the place is going to explode, hit this button. He's basically just required by the insurance company, right, to hit the kill switch if the place burns down. And so its costs are very low, and it's just pumping oil out of the ground, and probably the barrel probably costs $6, right? And the oil was $1, and then you go and sell it for $200. So, but not all oils like that. So they say the frackers are paying, more like $60 a barrel. Chris says they think it could drop to $20 a barrel. Well, I mean, that doesn't mean anything, right? Oh, I heard it was going to drop to $5 a barrel. But it is a supply and demand issue. And as a currency trader, you need to find the winners and the losers. Okay, and selling the Canadian dollar is the obvious one. Okay, you can see I had this coming back down, but this is well before the fundamental event didn't take place, right? There's an old technical play, but what you're looking at is the fundamentals. Okay? This move is not a technical move. This move is the OPEC meeting on Friday, and that changes everything. Okay? If OPEC had cut on Friday, we would be down here. Okay? Capiche? Is it oversold now? Well, let me give you a word of caution. When it's a fundamental move, your technicals are, I'm not going to say less important, but you're not likely to see reversal patterns. I'd rather you look at it that way. I'd rather you look for continuation patterns and places of exhaustion. But it's not a sense of overbought and oversold per se. It's just there is a dramatic, it's a dramatic situation. It's a dramatic, I can't even think about it in the English language. We have way too much oil in the system. We have tanks filled, we have pipes filled, we have tankers floating out in the ocean waiting for prices to come up. And all the producers are staring at each other. Is Canada going to cut production? Is OPEC going to cut production? What happens when they bring Iran on board? I mean, who's going to cut? Because the fear is you cut production and someone else just fills your production, they make money, and you make nothing. So it's a game of chicken, right? Meanwhile, we have Draghi that was supposed to add to quantitative easing on Thursday, and he wimped out. So where's the demand going to come from, guys? How are we going to get those giant factories in China running at near capacity when nobody's buying anything? Right? So, on the shorter term, I'd be careful about thinking about this technically. You need to think about it. And I think last week I talked about watching a move like this as being like a tsunami. Like it's just a bad idea to say, well, maybe now I'll swim against the tide. It's really good to stay dry. It's really good to just not get in the water. Just stay out. Okay? And what I mean though is, it's dangerous kind of saying, well, technically this should reverse. It's not technically anything. So if you were going to do one thing and one thing only, is swim with the tide. If you have to get wet, swim with the tide. Okay? Okay, so it's not an issue of oversold and stuff. This is billions and billions and billions of dollars moving because business plans are being canceled, not because of your, stochastic cross. Okay? So, because how about this? I've seen this before in big fundamental moves. I'm thinking of an example, but I can't think of what the fundamental play was. But I remember discussing this with some other time, maybe a couple of years ago, and there was some fundamental play going on. And he's like, oh, I'm going to short it at that, I'm going to short it at that pivot point. I'm like, dude, hundreds of billions of dollars are pouring out of old investments and trading ideas and portfolios, and lots of people have found out they're wrong. They don't give a damn about your pivot point. They're just pulling their money out. They're just bringing it home. And you shouldn't get in the way of that. Okay? It's not a nice little trade. It's almost panic. Like, hey man, if I just get in front of those stampeding elephants, I'll get a clear shot. All right. Right? All right, good luck with that. It's probably not the best way to hunt elephant, if you have a spear, that is, right? Yet, no, you mean in a fundamental way, is oil. No, I wouldn't, if I was a portfolio manager and I had several $1 billion to invest, I don't need to take the risk now. If I'm looking at oil companies I want to buy or something like that, I don't see why I have to buy on the free fall down. I think I could buy after the recovery. Okay. So how do I trade this technically is another way of asking. One really nice way to, is to wait. Where's my drawing tool? I had to kill it because it froze. Let me try it one more time. Okay, let's talk about buying the bottom. Now, you can hedge with binary options. It's actually a pretty good idea. Something like that. But let's fire up this drawing tool. All right. Okay, one of the things I want to look for is a break of this zone. Okay. Let me change the color on that. That's just too dark. Cayenne. Do you like cayenne? Yeah, cayenne. Okay. Now, ideally, there's a good level of support. Now, this black line you see, it's not actually support. It's just the profit target that I have for selling. But anyways, if I'm going to be a buyer, a couple of things I want to see. There should be a pullback at some point, and it's going to test in this area, right? From this area to this area. So I wonder if I can draw that. Will it double draw? No. So maybe I can draw this with a different color again. Maybe yellow will make it greenish. Let's see. Yeah, I think you can see that. All right, so you got your first area. I'm going to draw in this yellowish greenish line. Okay, that's going to be the first area of challenge. Okay, so let's say it bounces at some level of support, whatever it is, comes up, and it'll challenge this, and if there are bears in the market, they will sell. I know that because that's a sell zone. Okay, but we're talking about a reversal here. So let's say it comes down to the key level of support. And again, this isn't it, but let's say there is one. Let's say it's just the psychological level of 38 or 38.50 or whatever. Okay. It comes here and it bounces, and then people realize it's fallen too far, too fast. Okay? And now it needs to break this first sell zone. Okay? And make 100% retracement of this drop. Okay? Comes down, kicks off this old resistance, becomes a new support, and this is actually called a 1, 2, 3. Okay, because it starts with a double bottom. So that validates the support. Then the higher high, which is higher than this high. And then ideally, somewhere around here, really it's somewhere between the 382 and 618, it validates the bottom one more time and the new one. So now you get a higher high and then ideally a higher low, and you're off to the races. And it's sort of this area in here that I'm looking to be a bull. Okay? And it's this in particular. And when I see that, then I say, the market's decided to print a bottom. I don't want to be the one that decides that. So one of the things I say, because I consider myself primarily a trend trader, so one thing that you'll hear from me a lot is that the trend will continue forever, and nothing will stop it. until it reverses. Right? It's going to fall forever and ever and ever and ever until it reverses. Okay? And then reevaluate. But, one thing that I have found over the years, remember, I've been doing this for, a very long time. The best way to lose money is to say it can't fall any farther. It can't possibly go any higher. And the answer is it totally can and probably will fall farther or go higher, whatever the trend is. And you will go broke betting against big money. If big money wants it to go up or if big money wants it to go down, it's going to go down. Now think about this. This is crude oil. The reason it's going down is the entire oil industry is creating the conditions for it to fall. You're going to prop up the entire oil industry because you said, oh, well, it can't fall any farther. Of course it can fall farther. So I'd rather you be a trend trader. So you just saw I drew it really nicely, right? I'm just like, yeah, well, if it comes up here. So in this case, if you're trading a trend, you're selling these little rallies. Okay? Right? You understand? Don't stand in front of a moving freight train. It's not a good game. And actually, it's counterproductive in a way where you're going to train yourself to take bets. I bet you it won't fall any farther, for example. And you really need to untrain yourself. And the way that you should be trading is, all right, you say, like, look how I drew this. Look how nicely. And the funny thing is, I don't know if you recall, but I drew these things, on the way up. Right? I drew these things on the way up, not on the way down. The reason I draw them is I want to see the break. So we were up here, and then we were down here, right? Broken through these levels of support that I drew based on price action when it was doing stuff like this, right? I drew a line here, and I drew a line there, and that's what these orange lines are. But why do I do that? Because I'm looking for the break, and I say, aha! That is technically important. And what are these orange lines? The short zones, guys. Roll reversals. Okay? And I want you to train yourself. Okay? To trade those retracements, right? Okay. Trend trading. So if oil's going up and you're a bear, you're simply tracking the support as it's going up, right? Makes a new higher high. So you track it, right? So that if it decides to do this, now you know what to do. But if it makes a higher high, mark that one. If it makes another high, mark that one. You're just waiting, right? This is where I say that you should have a bias, and if you're not waiting for something, you're not trading properly. You could say, I'm just a bear on this, and I'm just waiting and waiting and waiting. What are you waiting for? Change in trend, right? From a series of, higher high, higher low, higher high, all of a sudden, whoa, what is this? 100% retracement and then lower high? What? Right? Because that predicts a lower low. And that your whole game as a bear is just sit through the bullish move up, waiting for that, and then jump on board, right? And then what? It's going to come up, roll reverse off of this zone, and you're going to do it again. Then what are you going to do? Mark that, bring it across, and you're going to wait for the next rally, and then you're going to sell that. Notice you're selling rallies. You're selling green candles, not red candles. And you want to know why amateurs lose money? They wait for the break, they sell here, right? And where do they get knocked out? Here. So if you're a really good amateur, trend trading in the direction, you don't lose money. But of course you don't make money. If you're a bad trend trader, you know, you're even later because it's whatever, and you know, and then whatever, and small stops is the game, and then you just die of 1,000 lashes, right? So one of the things I've always said is I want you to have a bias. I don't care how you get it. Flip a coin, right? And I don't mean on a currency pair. I mean on a currency. You're either buying Canadian dollars or you're selling Canadian dollars. If you're a buyer of the Canadian dollar, you haven't done anything for the last 2 days. Well, so what? Okay? You know what I mean? I'd rather you pick a direction and wait for a technical setup than just swinging both ways like a broken gate. Because if you don't have discipline and patience to enter your trades properly at support and resistance, you're not likely to do that very well either, and so you're going to lose a lot of money. If you have a direction pre-established, like I only buy Canadian dollar, well, even in markets like this when the Canadian dollar is super weak, you just never get an entry. You understand? You just sit around like, I still haven't bought the Canadian dollar. Look how cheap it's getting. Well, keep waiting, dude. Wait for it to print a bottom. In this case, you know, it's a top because it's on the right-hand side, but you know what I mean? So anyways, that's oil. Mexico produces a lot of oil. This is the scalp. Remember, I said it last maybe a day or two. Okay, there's a nice little scalp on that. All right, so oil. Mexico produces a lot of oil. How do they feel about the OPEC meeting? Did it work out for them? Let's see. OPEC meeting? Right? Whoa! You're not going to cut production? Right? Retracement? Monday? Right? Tuesday morning? Boom! Lovely till your mum. So Mexico, they don't like that news. Let's do it here. Boom. Give me some Noki. I'm not even watching Noki. Here's Seek. Here's Noki. By the way, you guys watch the TV show produced by the History Channel called the Vikings? It's great. It's quite well done. Except all the men wear eye makeup. I can't figure out that. Like, why do Vikings wear eye makeup? They must be American Vikings, right? So anyways, USD Norwegian krona. There's the krona. Let's see. Up until the OPEC meeting, Norway was stronger than the US dollar. And then we had the OPEC meeting. Whoop, 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 whoop. Then Monday morning came out, once the whole world could read about OPEC not cutting production. They read about it all weekend, that oil prices are going to tank, and whoop, whoop. Look at this, back to the 21. Whoop. Norway getting crushed. Well, Chubba, yeah. You're missing the point. This isn't skyrocketing. Norway is on the right-hand side of this currency. So this is the Norwegian currency tanking. Okay? Even though it's going up, it means Norway is going down. Mexico is going down. Canada is going down. I don't have ruble, but I imagine ruble's not loving it. Oops. Right? I don't think there's ruble on here. Didn't even look. But no, I highly doubt it. Right? So, yeah, if you're producing oil, it's not cool. Okay. Now, do you understand how important the fundamentals are? Where even when this was technically bullish, boom, it just reversed now. It doesn't look back. Would anybody trade the stock market? Yeah, Chrissy does. All right, well, I'm still just kind of eyeballing this area in here. Let me back out a little more. Okay, can you see it? So here, okay, here, and currently we're about, oops, come on. Currently we're here. Okay, if that breaches, I'm eyeballing this area. Can you easily see that? Yeah. Right, so this is a buy zone, and this is a buy zone, and we're pretty close to it now. So again, when this goes away, all right, so this grayish bluish area is just below where we are now. I'll go to a 15-minute chart, and that's it there, 2050. Okay, and this is the cash price. You might be quoted the futures price, and it'll be slightly different price, but nonetheless, support is support. Yeah, Chris. Chris asks to do a session on how to trade interest rate differentials. The only issue with that, though, Chris, is we don't live in a world where that is necessarily the case. That's a healthy, normal world. So I don't know if you're in a university class or something, but if you are, you'll pick up a textbook and they'll say, "Oh, well, the foreign exchange market moves on interest rate differentials," which is true 10 years ago, right? When I first started trading currencies, that was totally true. Well, what about since then? Well, we've been at a zero interest rate policy. We've had currency wars. China's sucking wind, Canada's sucking wind, Australia and New Zealand are sucking wind, right? New Zealand's going to cut interest rates. Europe is all screwed up. And really? Is it really interest rate differentials? Well, what are the interest rate differentials, right? Well, New Zealand's going to cut to 2.5% and Australia's going to be 2%. So which one's going to be stronger? You're going to say New Zealand because they're 2.5%. Yeah, but New Zealand's cutting and Australia might be printing a floor. So actually Australia would probably be stronger. But you see what I mean? So whatever. So in a normal world, yes. But how about this, though? There are other cases. Do you guys remember the Greek financial crisis? A long time ago. Okay, and what about the other pigs? Portugal, Ireland, Italy, Greece, Spain. Okay? Horrible, Horrible, horrible economies. Okay? And they needed to borrow money, but we were worried about all of these countries defaulting, right? So were investors eager to lend these guys money? Default from Spain, for example, and Portugal, holy moly, like almost certain, right? Okay, so money was, but these countries still had to like pay bills. They still had cash flow concerns. So they need to borrow money from the market. What are you going to do to entice someone that doesn't necessarily want to lend you money because they see you as being risky? What are you going to do to entice them to lend you money? Increase the interest rate. Hey, will you lend me money at 5%? No. How about 6%? No way, dude. How about 10%? 10? Well, how about 12%? All right, well, 12%, yeah, okay, let's talk about it. Okay? You see what I mean? And so these countries, all of a sudden you had like 20%, 15 and 20% short-term loans, like 1 year, bonds, right? Paying 12, 13, 15, 18%, just ridiculous. And what happened to the euro after Draghi said, all right, well, I'll do whatever it takes to protect the euro? What happened to the value of the euro? These economies were about to collapse. The euro skyrocketed. We were at, on the Euro USD, we were at 140. Okay? Why was the euro strong? Interest rate differentials. When did when did the euro start to get weak? Started to level off after some of those bonds were starting to mature, and Draghi was starting the process of quantitative easing, propping up those bond prices, keeping the new low interest rates low, and all that money flowed out, and it started to weaken again. So it weakened because there was no interest rate differential. It got strong because there was a high interest rate differential, with implied guaranteed by the ECB just to lower the risk, but then the flood of money came in to catch the interest rate differential. So, it's an interesting thing. Like when the United States economy was in the tank and we were at 10% unemployment, the US dollar was ripper strong. And it had zero interest rates. So that's what I'm saying, Chris, in a perfect level even Steven world, in the textbook, yes, that makes sense, but we haven't had that for quite some time. So, not today, right? I don't know who that is, Lucas. I'm sorry. Yeah, Lucas says, what do you think about this dude's view on the economy? I don't listen to anybody else, honestly. So I don't know who he is. He's probably super famous, super smart. I have no idea who he is, or I don't really care about his opinion. Any reason why the pig? Well, the news was pretty mixed today, right? Which one do you want to do? Pig dollar? Pig yen's worse, right? But we're in a pre-established bear trend, so yeah, no, I'm looking at it. I see the lows and stuff, but there's not. I mean, it's not new news, right? Uh, Currently, yen is strong relative to the dollar. Well, my computer's a little slow. I'm going to have to reboot it this month. Kiwi, Swiss, and Aussie. No, I'm not in those trades anymore, Ricky. So I need a new technical bottom. Okay? No, Kevin, I was in both those trades actually. I was long Kiwi, Swissy, and Aussie, Swissy. Oh, come on. I'm freezing up for some reason. So cold. I'm a frozen. Yeah, I'm out of them. Yes. Yeah, Marcia is like milking pound, dollar, and pound. Yeah, but wow, I totally froze up here. Oh, here we go. I got a lot going on my PC right now in the background as I'm recording a live webinar, right? All right. So, anyways, okay, pig dollar. Okay, let's talk about this. I guess it's been too long since we've reviewed this, but what's my outlook for the pound dollar? Can you figure it out? Okay. So I've been a bear since May. And through February, March, April, May, I identified all the different areas in which you should consider shorting. Very, very clearly and articulately set you up on this. Oh, you know what it is? It's my drawing tool slowing the PC down. Let me kill it again. Yeah, it is. All right, so there's the general plan. It was actually the plan I created in December last year, so it was exactly 1 year ago. We had it rallying up to either, it was the 3A2, and then the 3A2 was breached. Then it was the 50%, which held, and then the actual short was the lower high. So it was set up in April, short taken more like July. And since then, so here's the top at the 50%. Big drop, confirms it. A little blip here, right, for the lower high, lower low scenario, which only is on the shorter time frame the rollover of the bigger move. So here's the 50%. Okay, lower low, lower high, lower low, lower high, lower low. Okay, and we were just in this area here where I have it bouncing from previous support. And look, I even have it drawn with permanent marker, right? You see it? Here's the little ones, lower low, lower high, lower low, lower and high. And if you were with me, you know I drew this before it actually happened. That's why it doesn't overlap very well, but you get the idea. Hit support, so I have this move fib now, right? This top to this bottom. I have it coming back in somewhere between the 382 and 618. It should fall. Okay, it came up to the 618, hit it to the pip, bearish engulfing candle. Okay, lower low, back into the support, right? Little breach, lower high, lower low. And it kicked off this, which it should. Okay? And so we're just really, now if I was going to readjust, if you're trend trading, I mean, right, we're right in the sweet spot again. So it basically popped up 618 and straight back down. So by the way, off the daily 21, I don't know, again, if you're a trend trader, that's pretty straightforward, and that's probably why Marina's just killing it. Because there's not a lot of questions about that. I mean, again, you can see there's actually an arrow drawn here. I mean, right? Which we drew down here. So there's not a lot of questions about it. It's bearish. Right. A question here. Do you think the RBNZ will cut? Yeah, why not? It'd be interesting if they don't. Okay. But there you go, Marcia, right? Marcia's just crushing it, and I don't see why you wouldn't be. I guess I've been shying away from pound because I've just set it up so many times on so many time frames, right? 15-minute chart, hourly chart, 4-hour, daily, even weekly, right? There's the weekly chart. I mean, it's just, I don't know, by definition, it's bearish. And when it had, and by the way, let's review that. Back in here, back in the summer, okay, back at the top of this move, when did I say this was likely to bottom out? I mean, it's already been talked about and discussed, right? Yeah, and I'm thinking, I don't think it's going to like drop to, 30 or something like the technicals. Because remember, at some point it's not going to be a technical move. So I think there's going to be some hesitation in here. Maybe a little bit of a lower low. But you see, I already have it marked. Now, I have some doubts it's going to fall that far, but maybe it could. I think we're going to start getting some green shoots right around this double bottom. Okay? But the 50% predicts the 1382. And again, we've been talking about this move since about March. March! It's December! So you have to always put your short-term trades into a long-term context so you know whether you're trending or counter-trend trading. If you're counter-trend trading, your expected profit targets should be closer. If you're trading with the trend, then they should be farther, and maybe your holding period should be longer. Okay? But do you think, so this is a weekly chart now, do you think this has an impact on your hourly chart? Oh, great. Now I'm so zoomed out. Wonder if I can go like this and then do hourly. No. Let's try it that way. Do you think the weekly chart impacts your hourly chart, guys? Yeah. So this is why I ask you to start on a high time frame, do your analysis, and decide whether you're a bull or a bear. And just have a couple of reasons why. Okay? Print out your chart, take out a big, fat, stinky felt tip marker, and write down whether you're a bull or a bear. And then you you take that and you put it on your wall. And every time you walk into your office, probably 3, 4, 5 times a day, I want you to look at that chart and say, I am a hardcore bear on this. On the daily chart or the weekly chart, right? I want you to look at this every day and say, yeah, there's no doubt, man. I'm a bear on this pound dollar. 3, 4 times a day I want you to see that. Because it should impact what you do today, wouldn't it? Right? Because you know what your plan is. It must be frustrating not to have a plan, because without a plan there's no strategy, right? Very often I emphasize with guys that because I know when America was attacked in 9/11, friends of mine actually immediately just quit their high-flying Silicon Valley jobs and joined the military. They're just like, I'm in. And then 3 years later, their buddies in the Silicon Valley, they're making millions of dollars. they're stuck in Iraq standing by a Humvee directing traffic. And they're like, what the hell is this all about? What's the strategy? Why am I directing traffic? What's the plan, Stan? It must be incredibly frustrating to not see the overall strategy. Here, dude, go win some hearts and minds. Really? Must be incredibly frustrating. And trading must be like that. So there's a fabulous quote that I bring up from time to time, and it's a Jim Morrison poem that actually was put to a tune called Stoned Immaculate. But there's this, the last lines of the poem goes, "Let me tell you about heartache and the loss of God, wandering in hopeless night. Out here there are no stars." Right? So it's like, are you wandering in hopeless night? I mean, how does that feel, right? Heartache and the loss of God, just like your mind is exploding. Without the strategy of just sitting down and I think I'll fire a couple off at this pound dollar today, and then I'll take let's look at Aussie Kiwi. Aussie Kiwi? What are you doing? Fundamentally, that makes no sense, right? So you have to start with a strategy first and foremost. You have to know what you want or to buy or want to sell and have a clear and articulate reason for it. And it's good to walk into your office 3-4 times a day and say, I'm a bear. I'm a bear. I'm a bear. Right? You just know it. What are you doing on the pound dollar? Oh, well, let me show you. You know, on the macro view from the big drop, the 50%, but the lower low, lower high, lower low, blup, blup, 21 EMA, blup, 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 blup. You just know where you fit. You have a map. You're not wandering in hopeless night. It's a beautiful, clear sky day. Right? It's warm and sunny. You have a map. You know where you're going. You have food and water because you have a plan. And you're like, this is going to be a great little hike. Love it. Versus walking through the desert in the middle of the night. You have no plan. You got no water. You got no food. You have no map. Don't know where you're going. Don't know why you're even here. Right? Don't trade like that is all I'm saying, right? So Linda, I have, so maybe I didn't say it very well, but technically the Fibonacci retracement and extension predicts a move down here, 136, right? But I have this marked out here as a potential zone where I think somewhere between now and sort of February, March, maybe we work our way down to this level, which is more like 45-ish. It could go lower. I'm not going to freak out about that. But I think we're going to start seeing better data out of the UK for reasons I've already gone over 10,000 times. And that would start to stabilize this, maybe not against the US dollar, but maybe against the yen, for example. And I may look for more of a double bottom-ish. Okay, maybe it only comes down to here, and then it up, down, up, and that kind of thing. And maybe by the middle of next year, we're long the pig, not short the pig, and I don't quite think we're going to fulfill the 50% to 1382, which is the technical Fibonacci suggestion. But if we don't get those green shoots, if I'm wrong, like if more bad data replaces old bad data, then I'm going to be wrong on those and we'll have to readjust. Maybe we are on our way. But all I know is at the moment we're on our way to 136. I'm just thinking maybe by February we're buying it in the mid-40s back the other way. Okay, so I already have a plan for the extension, I already have a plan for the reversal. But the point is, when we were down here last December, this is exactly a year ago, guys, We had already had a plan for this to rally up, at least to this 382, which it did. So it only went up for 3 months. It went a little higher, so I said, well, how about the 50%? So it hit the 50%, made a huge drop for about a month, pulled back, consolidated. So what we had here was then a lower high scenario, which it did, and then a lower low, and then just clearly now a bear. Just absolutely, totally, without question. It's bearish. It made a lower low, then came back up, hit the 382, did the roll reversal, new lower low, then a new lower high, then a new lower low, then a new lower high, then a new lower low. Just, there's just like no doubt anywhere. Okay. Chris says, what do you think about the rate hike out of the United States, next Wednesday? Well, I think it's very much priced in. I think Euro got crushed. That move, only because it was, overtraded, overcrowded. And that's going to be affected as bears take profit. That's all the only thing that happened where bears took profit. And so one of the things I said is maybe we can get down to a double bottom by the end of the year, but it doesn't necessarily have to happen because we may not get new money. So, if I were to guess, if we were going to head down, we would diverge all the way. On oscillators and stuff, because it would show downward moves, but less and less bears, and that creates the divergence. Okay. The other thing that I said yesterday and the day before, I wouldn't be shocked if I'm selling this at 112. I'm not saying it will, but I don't see why it couldn't. Okay? So let's just do this very quickly again. I believe I did this yesterday, but I'll do it again. You take this resistance, right? You move it across. This is your support zone. Please include the weekly central. Why wouldn't you? You have the 4-hour 21 as dynamic support. Why do you use the 4-hour dynamic support? Because that's a buy. That's why we use it, right? So it's there. So there's a buy. There's the weekly central. There's the roll reversal. And then you fib this, right? Right? Hallelujah. It's a 382 Fibonacci retracement. So, why wouldn't this go up? And do you remember me yesterday telling you, what kind of fool would sell this in here? Right? Remember talking about that? Mama don't raise no fool. Right? I mean, that's just so ridiculously supportive. So if you were a bull, that would be a buy. And I did talk about that. So if you're a bull, maybe this goes to 112. My two lines are 110.50 and 112.50 or something, right? So, yeah, here it is. So this could go up this high. Will it? I don't know. Could it? Well, if you wanted to, you could have bought it for these at least 4 reasons why you could have bought it yesterday or today, depending on the time frame. I guess it was really yesterday, your entry. And so if it goes up, then that's going to be cool. Now, the other plan is, what if the market just doesn't want to go that high and it wimps out at 110? Could it possibly wimp out at 110, guys? 110.00000? Okay. Then what do I want to see? This would be interesting, wouldn't it? Okay, and that's the end of the week, right? Kind of stuff. Because it's a psych level, and really no other reason. But because it's a psych level, though, Warren, there might be traders that were short the Euro USD all year, took profit around 105. I took profit at 105.50, guys. And went down to 105 and then jumped 500 pips without me. I already took profit. Yeah, a little bit of risk. so I took my money. When a little bit more risk was, or significant risk was coming to the market, I got out. You watched me do the whole trade, so, there you go. But what if those traders say, well, I took my profit at 105. Let's say you took $1 billion out of the market, and you're like, okay, yeah, I got 3 more weeks. I could still squeeze out some more money on this one, right? So maybe you're sitting around waiting. Maybe you won't put the whole billion on, but you might just throw down 100 million and see if you can sneak out a few extra pips by the end of the year. What do you care? It's not your money anyways, right? Maybe get a bigger bonus. Right? So, I'd just be careful, An amateur would just keep selling this blindly. Oh, well, Wayne told me I should be a bear on Euro USD. Well, okay. No. Yeah, down here, but after this, no. So how do you get back in? I would like to see it reverse, excuse me very much. Right? You know what I'm talking about? I want to see a reversal. Show me a reversal first. Show me proof and evidence that people are bearish again. I don't want to be the one that just sells it at 110 because it's 110. I don't gamble. So, cool. So maybe it reverses at 110. Then I either short the double top or I short the rally after the lower low, or I wait for it to head up to M4 R2 area. Okay? But I need to know new money has re-entered the market. Without the new money, what's going to happen? It's just more people taking profit by the end of the year. That's the only thing happening. And then some scalpers, or not scalpers, but let's say speculators, and we are speculators, day traders and stuff, they're trading this north. They're not trading this south. So I just need some proof, that's all. So maybe a good time to keep your powder dry, right? So maybe you trade this 15-minute up and, just keep your stop close and you'll be fine. So I got to jump, babe. This was real. I'll be here tomorrow if we can go through other currency pairs if we haven't covered it. Okay, and remember, we got a lot of things coming up this week. It's getting crowded. But thank you for, attending, but also thank you for asking good questions and stuff. And, I don't know. That's it. Thank you for your loyalty. So I'll see you tomorrow and the next day and the next day. I haven't taken a day off this year. Isn't that neat? Maybe 2 years. When was the last time I took a day off? Isn't that neat? Is that cool? You've bared through, I've been sick a few times, but I still worked. And you've been patient with me. But anyway, so I give you everything I possibly can, and it's because you take these days, you take these events seriously. They're not, we have fun, but they're not, silly. And you work really hard, and you ask good questions, and I don't know, I appreciate your effort. So I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Cheers.